Thank you also again for joining. Like she said, I'm Greg Carruthers, and I work with Avalara here. And Avalara, we're a sales tax automation company, so I really enjoy what I get to do here because we help businesses like yours be able to avoid risk and get ahead of it. My previous job, I started my career for the last 14 years actually, before this, in the banking world, and I got to find out about all of these things after the fact. If a business had some sort of compliance problems or issues later, then it was closing down loans and lines, and I got to see that side of it. So for me, it's really exciting to now be on the front side and be able to help avoid those kind of negative situations. So thank you for taking some time to join and learn about sales tax CPR. When you probably saw CPR, you were thinking what I used to think before I worked at Avalara, as far as CPR being more of a medical term. And for any of you that might already know, I don't know if this is common knowledge, I know because my mother was a nurse, that after you're certified with knowing CPR, you get a little card that you can see on my screen. There are some examples of what those CPR cards look like. And I was thinking about this last night, and my family and I, we were at a barbecue, and everyone's talking, getting to know each other, and I was thinking, if I pulled out a CPR card right now out of my wallet and I were to show it to the person I'm talking to here, they would probably be totally uninterested and really bored at this. It's a very, CPR is not that exciting, right? But then on the other hand, if there was some kind of major health incident and I actually got to perform CPR and I was certified to do it, I'm not, so you wouldn't want me to do this, but if I was certified and there was someone had a heart attack or something major and you got to actually see CPR in action, boy, that's going to be everything that people are talking about the next day. So I think sales tax relates very well to this because, and some of you that are on the phone, you might be dealing with sales tax in your job, you could probably relate well that sales tax is a really important part of the business, but day in and day out, it's kind of like the last thing on a lot of people's minds. They think that it's very uninteresting and it doesn't matter that much. But then the second there's an audit, the second that you have to really perform your sales tax duties and it's really being looked at under a microscope, boy, it's like the most important thing, and it suddenly seems like every meeting and everything is revolving around, what's the status of the audit and what's happening. So sales tax and CPR, they relate very closely, and as you'll see later, we'll have a little acronym for what CPR and sales tax stands for. Today we're going to talk about the 6 different steps of CPR and also some of the challenges that businesses are facing because of sales tax. Sales tax at a high level is very, very complicated, and as businesses grow and expand, it continues to get more complicated. So let's talk about some of the challenges that you have to face with sales tax. It is a statutory requirement, so no matter what your business does, you're going to have to deal with sales tax. And the funny part about sales tax, unlike other parts of your business, the states, they actually get to make the rules and tell you how to do it, and then you're the one that's out there trying to follow these rules and understand them. But then they also get to not only create the rules, they're the ones policing the rules. And then on the backside, they're actually the judge, too, that gets to decide the penalties and the consequences if you're not following their rules and doing them correctly. So with sales tax, the states, they have all of the power, and each state, they get to make their own rules and laws as far as what you have to do and how you do it. And that's why it does get very complicated as your business moves into multiple states. And especially what we're seeing a lot of today is businesses selling online and different digital type services and the things that have evolved just with how the different trends have been changing things. So before companies like Avalara were around, manually managing sales tax was essentially the only option that's available. And many of the businesses that you guys are working for now may still be doing it this way. Really, before about 15 years ago, it was the only option of manually doing it in-house or manually doing it through a CPA firm or bookkeeper of some sort. The problem with this is sales tax is very, very labor intensive. And with humans, even on our best day, errors are going to happen, and that can cause for major problems as orders are going through. that is what leads to part of the expense, but also it's trying to constantly maintain and update because it's always changing. Sales tax isn't one of the parts of your business that you can just master and move on. It's always having to have attention paid to it. It's always requiring updates and staying attuned to the different laws and changes. You can see in 2014 there were over 14,000 changes across the U.S. So there's many, many different laws that are coming into place, and we're actually seeing that increase and be even more rapid because businesses are changing how they do business with new technologies and machines and the internet, how it's changing everything. This is 100% non-revenue generating activity for a business, so it just doesn't really make sense for, putting your best employees on this and spending a lot of time trying to research and stay very accurate with it. At a high level, I recognize some people on the call might not be in the trenches with sales tax, so let me paint a picture of what it is that they're having to deal with. Across the U.S., over 150 million different mailing addresses. This is important because a lot of products are being shipped to or delivered on-site virtually through downloading and things like that. There's over 12,000 different jurisdictional rules, 35,000 different sales tax rates to worry about, 30 million different exemption reasons why a product that would normally be taxable is not taxed for some particular reason, and 750,000 exemptions for buyers and sellers. So what's the cost of not making any changes and continuing to manually manage sales tax? 44% of businesses, according to the Wakefield research study, don't remember the last time that they went and updated their tax processes. Thinking about your own business, this might be easy to recognize. A lot of times when a new e-commerce system or new invoicing or accounting system is put into place, someone goes in and builds out a whole bunch of different sales tax rate tables, and they try to make it as accurate as they can, but then there isn't a lot of follow-up to make sure that this is staying with the different changes that are happening each month in the different states. In addition, when they were asked if they were audited, if a mistake would be found, it's essentially a coin toss. And this is, again, because there's so many changes and it's so difficult to spend the time that's necessary to be able to have that level of accuracy to understand what it is the state really wants. And the average cost from an audit can be very expensive. As you're seeing on the slide, Wakefield Research, they came up with a little over $114,000 for the total cost of an audit. This is going to be considering the amount of time that you're researching, pulling the transactions, getting the information that the auditors want to see, and also paying some penalties and fines based on the average of what they're seeing. So what are some things that have created businesses to change that process? The common things that we're seeing, I'm putting up on the screen now. I'm only going to highlight the ones that I hear the most about. Obviously, we've spoke a little bit about audit. That's when you recognize that there is room for accuracy and more efficient ways of doing it. Mergers and acquisitions are another really big thing because the company's growing rapidly and they don't have time to dedicate all the resources needed to get compliant with sales tax. So they look at automating the process or outsourcing it to be able to grow faster. The other thing is implementing or changing the e-commerce platforms or accounting invoice systems is usually a really easy time to say, okay, it's time to get compliant. We recognize that the old system wasn't updated for a long time, so we don't want to transfer bad information into our brand new nice system. So what is sales tax CPR? The question we're all really been wondering so far. CPR, it stands for Calculation, Product Taxability, and Returns. So we're going to dive in a little bit deeper on these different areas and talk about how automation can also help with this. So the first step as a business you need to figure out is where you have Nexus. Some of you on the phone I recognize probably don't recognize the term Nexus. I had no idea what that meant before I was working with sales taxes at Avalara. What Nexus is a physical presence that it creates a requirement for your business to then start collecting and filing sales tax within a state. So each state defines this physical presence very differently, and it's changing from day to day based on the internet and the types of goods and services that are being sold. Some of the most common Nexus reasons you should be able to see up on my screen now. Obviously buildings and warehouses, locations in multiple states, having repair people going out and fixing things on site or leaving, going across state lines could trigger Nexus into other states. Trade shows are a big thing now where states look at you coming into their state, advertising or selling your product at the trade show, and then having the requirement to start collecting sales tax on all orders, regardless of how that was made, whether at the trade show or through an online. So states are really looking for ways to expand this and be able to expand their reach so they can generate additional revenue. A big part of the reason why they're looking at new Nexus creating events is a lot of business is done online now. About 70% of sales are conducted online, but yet only 47% of the businesses, 47% of the businesses are still just remitting to one single state, even though they likely are selling products all over the place. Many of you can probably look at your own sales numbers and relate very closely to what you're seeing there. As these states are looking for ways to capture additional money, then they're creating very strict sales tax Nexus creating triggers. Some example, we already talked about the trade show. Another one is what's called affiliate Nexus. So if on your web page you have a link that is going to another customer's web page where they can click off that and then go and buy products from the other customer, and commissions could be shared between each other, or some sort of incentive program between each other for the affiliate that you have there, then you can actually be creating Nexus where that other company is located at, because you have that strong partnership and the website is creating the link. So it's very far reaching, and it's not just as simple as a brick and mortar store or an employee in a state anymore. And the complexity comes in with each and every state getting to have their own rules for sales tax, and then of course ever changing them. So the good news is there is help with this. Contact your accountant, contact your CPA, make sure that they're familiar with not just the local jurisdictions of where sales tax is for where you live, but also the Nexus rules across the country, so they can understand as employees are doing business trips or the different business activities that your business could be involved in, how that could be triggering Nexus in other states. Avalara also has a professional services group if you don't have a CPA or someone that's familiar with these laws. This is all that Avalara does is sales tax, so we're very, very good and fast and accurate with getting these results back if that is something that you wanted to look into. There's also a free guide if you're more to do it yourself or want to learn more. The link is up available now where you can see that. The second step of CPR is pressing for information on tax rates and jurisdictions. Sales tax isn't just so simple as having a tax rate like many people think that it is. Like I thought it was before when I was buying goods and services. I just assumed that's the tax rate, and it's very easy to keep track of that. Working here, I now realize that's far from the case, and there's over 12,000 different taxing jurisdictions across the U.S., and depending on that product or service that's being sold in that jurisdiction, that particular area, it could be taxed different, either a percentage of that full sales tax rate or no tax at all based on it. So there's many, many complications that go into this. And you can't just estimate these rates or take the highest sales tax rate within the state and assume that you're going to be okay with that. It's just very inaccurate. Many businesses are still using zip codes for keeping track of rates, and I'll be able to show you why zip codes just aren't very accurate. But the reality is zip codes, they were created for mailing packages and sending mail, and they really have nothing to do with sales tax rates. It's just that was the easiest way for getting a sales tax rate as accurate as they could before the internet and before all these additional tools became available. So 15, 20 years ago, this was a great method for being able to get as accurate as you could. The problem is the states have also evolved their technology, and they have been able to increase their accuracy. What I want to do is show you the U.S., actually the whole world right now. Let's zoom into the U.S. since that's what we're talking about today. And actually, let's pull up our friends over at Bonds. This address might look familiar. So what I'm doing now is just pulling up Bonds location, which I just found their address from their website, and zooming in to take a look at where they're located. So let's say that we're delivering a product or service to them. All the different colors are illustrating different sales taxing jurisdictions here. But you can see the product being delivered here would be at 9%. If the product was up here just a little bit north of them, we're looking at 10%. You can see there's many different colors and different tax rates based on this. And as you zoom in, it actually gets even more complicated, which this is just a website with a free tool where you can zoom in and see some of the different sales taxing jurisdictions and look up some basic rates and information here. But clearly you can tell there's many, many different colors on here, and it's not correlating to zip codes or any other thing. Sales tax is on its own. And as you can see now, going back to my slide deck, this is zoomed in very, very closely, and you can see the actual homes and the different colors illustrating different sales taxing jurisdictions here. Let me illustrate why this is important. Right here in the yellow area, there's a pinpoint coming in. So if you were to sell to this location, then the sales tax rate is actually, oh, excuse me for one second. There it goes, 4.85%. And then over in the purple, it is 8.35%. So a very big difference between the two, and there's really no rhyme or reason for how these borders are made. It looks like my 3-year-old had created their own, just grabbed a piece of paper and started scribbling on it. It doesn't make any sense with how these lines are made. Another layer of complexity with this is sourcing rules. Since we were just speaking about California, we'll use them as an example again. They have what's called mixed sourcing rules. So what that means is the counties are origin-based, where the product is being shipped from, and then the cities and the special taxing jurisdictions, they're where the product is being shipped to, so destination-based. So it makes you wonder, does your system today, you look at where this product is coming from, where it's going to, making a combination of those two rates and having them connect and go to each other? So finding the right rate isn't so easy as a lot of people think from a high level. The good news is, like you were able to see from our website, the avataxrates.com, we have all of this mapped out in a very, very detailed level. So as you're inputting information, we can actually convert the address of where the product is coming from or going to based on the sourcing rules, or in both cases, like in California, and be able to have latitude, longitude, pinpoint accuracy, very accurate sales tax rate for that specific area. This also eliminates all the time spent with manually looking up and researching different tax rates and trying to keep track of as they change, because as we've already talked about, the states are constantly making adjustments and changes to the sales tax rates and the rules. The third thing is listening for the product taxability changes. So not only are you having to worry about the tax rate changes, you're also having to worry about product taxability changes. Some of the issues around the product taxability is it varies from state to state, and even within some states, the jurisdiction to jurisdiction can vary. If you're selling some of the products or services that you see on the screen now, then you have very complicated taxability, excuse me. So it would be important to understand, based on where that product is getting delivered to or coming from, how it's going to be taxed there and what the laws are, and have they changed since last time you've looked at them. Here's a few examples that always make me chuckle. Hershey's bar, delicious candy bar, which I got to see last night while we're making s'mores at the barbecue. This will be taxable, but then another very similar Hershey's bar is now exempt because of the ingredients that are used in it. Rockstar energy drinks, definitely taxable. Frappuccino, exempt. So you can see that very similar products could be taxed very differently, and a lot of times there's no rhyme or reason for how this is. It's just the states are getting to make these laws, and they have gone with it, and now it's up to us to try to sort it out and be able to tame that beast. Another level of complexity is around sales tax holidays. I was recently helping a business that sold high-end camera bags and backpacks for protecting expensive equipment, and most of his customers were military, but there's a few hobbyists that would also purchase his bag. Well, he ran into a problem in California again, sales tax holidays. There are certain times of the year where back-to-school items are not taxable. So even though he's not necessarily selling a backpack that would be used for going to school, because it is a backpack and it could be used for that, it is able to have a sales tax holiday, which means when you purchase during this time of the year, then no sales tax is allowed to be charged on his items. For him, this was a nightmare trying to manage not charging sales tax on certain items during certain times of the year and making sure that at midnight that night they flipped the switch so that no one was getting charged sales tax on that. And then after the holiday's over, being able to flip that switch again right away to start charging sales tax on these items. And you can see that the complexity gets difficult when you're selling online and people are checking out online and they expect the sales tax to populate very quickly so that they have a fast checkout experience. The next step is CPR is step 4, monitoring the tax-exempt sales. This is actually, this is one of the first things that in an audit sales tax auditors are going to be looking at. The reason that this is so important is if you're missing an exemption certificate or if you didn't charge someone sales tax when you should have, then your business can be left holding the bag for that entire amount of sales tax, which is a much bigger risk than a difference in the sales tax rate, which may be a couple percentage points that you might be liable for. So being able to accurately collect the right exemption certificate is very important, and making sure that your exemption certificate is valid for that state is even more important. A certificate that an auditor won't do you any good in an audit isn't worth collecting at all. So it's important that you're validating these and being able to make sure that it's the correct document, the updated document that your state allows, and it has all of the correct information that you need to have it classify as an exempt transaction. Make sure that these are valid and it's different based on the products that they could be selling. So just because they're a nonprofit organization doesn't necessarily mean the product or service that they're buying from you could be exempt. In compliance, it really isn't an option. Like we talked about at the beginning, that states, they require this and you do have to follow with all of their rules. They're constantly hiring new auditors, trying to bridge the gap of revenue problems and being able to find additional ways to get extra revenue. CPR step number 5 is getting into the right filing rhythm. So this is one of the last steps with sales tax compliance, is making sure that you are remitting the money on time and accurately to the state. Some states actually will give you advantages if you file early, and there's some other benefits of filing certain ways. Some states actually still do require paper filing, believe it or not. Many states now allow for e-filing, which is much, much easier, being able to go onto a website and have the funds electronically sent to the state. But at the bottom line, the states want to make sure that they get their money and they get it on the schedule that they set for you. So if you miss the deadline, then it could be costly for your business and paying unnecessary fines. being able to automate this makes it one source where you can go and pay multiple states and not have to worry about deadlines, and actually guarantees the benefits of any advantages that the state may have for filing early or additional benefits that they offer. So step 6, take a deep breath and know that you're pretty much done from there. Everything that we talked about at a high level is what you have to worry about with sales tax. So some of the advantages of being able to automate this are it's going to help you save time. It's going to make you much more accurate, greatly reduce your risk, and even shift some of that when you're using a service like Avalara that has guaranteed accuracy. What that means is if you were audited and you're using Avalara and there ended up being some sort of penalty that you would owe, then we would actually compensate you for that. It improves your efficiency for your business where you can grow much more rapidly and you don't have to worry about the complications of sales tax as you're acquiring another company or expanding into other states, or even going out for sales presentations. You don't have to worry about the consequences of those. Automating the process, it just really makes a lot of sense for businesses because you're able to save a lot of money and save a lot of time, and you don't have to worry about the complexities around sales tax. Avalara has been able to help with this by offering 3 main solutions. Our first one that we talk about is AvaTax. This will actually do a lot of data cleansing within your accounting system. Many of you on the phone could be using Dynamics GP or AX or even CRM if you have salespeople using CRM for inputting customers' address and information. We'll be able to correct that for them so you don't have to worry about products that you may be shipping out going to the wrong address or getting returned. AvaTax also manages all the sourcing roles that we talked about, making sure that it's looking at that ship to and ship from address, all the different jurisdictions across the U.S. completely being mapped out and very accurate, and product taxability based on each line of that invoice, evaluating to see if that should be taxable or not taxable, or maybe a % of taxable. And finally, very detailed reporting so you can see where your sales are happening and be able to monitor expanding into other states and any other kind of tracking that you would want to do as far as exempt or taxable sales reporting. The other offering is what's called Cert Capture, and this creates a step-by-step walkthrough wizard where customers can actually go and create an exemption certificate so you know that you have the most current, accurate document that's going to be accepted in your state or on the state where that customer is. It helps with the collecting of these, being able to store and retrieve them very, very quickly if you had to pull up copies of them, and also the tax decisioning. When the certificate is on file, then AvaTax will automatically know we have a valid certificate from this customer already. There's no need to charge sales tax on this order. It would automatically put that into CRM where your salesperson is completing an order, or into GP if you're creating an order there. It would know that there's an exempt customer and return 0 sales tax. Also with Cert Capture, it helps you to be able to manage these documents. An aspect of exemption certificates that isn't done well sometimes is managing when they expire and how to go out and collect those after they expire quickly. And the last thing is finally returns, and that's being able to accurately complete the sales tax return in that one or many states that you may be required to file in, and being able to get that money to the state in an appropriate fashion, how they accept it. With the returns filing, when you're outsourcing this, it also saves a lot of time because of notice management. For example, if Avalara was doing the returns for you and the state were to ask questions around your sales tax return or why something was taxed or not, they send you a notice. You would no longer be on the hook for answering those notices, and you can simply just upload those, and Avalara would actually do all the correspondence with the taxing jurisdiction to resolve that notice. So thank you again for taking some time to learn at a very high level sales tax CPR, and hopefully there's been some things that have perked your mind or has stuck with you where it does make you want to ask some additional questions or look into this more for your specific business need, where we can actually do a more formal demo and show you Avalara software and how it can alleviate the complications of sales tax and integrate directly into Dynamics systems through our certified connectors. You see my contact information, again, Greg Carruthers, and also David on here. Please reach out to either one of us with any questions or any additional information that you'd like to hear about Avalara or sales tax and how there's easier ways of managing it.